Before we get into today's video, some regulatory compliance. My name is Andrew Alexander. I am Head of Investments for Three Counties, an independent financial advisor based in County Durham, England. This video is for anyone who has an interest in investing and investment markets, both retail clients with no experience of investing through to industry professionals who invest for themselves and their clients. As independent financial advisors and wealth managers, there is no commercial relationship between ourselves and today's guest. The purpose of this video is educational, and in no way should any of the content be construed as advice, nor is it an enticement to invest. Past performance is not a guide to future performance, nor a reliable indicator of future results or performance. The value of investments may go down as well as up and is not guaranteed. Therefore, investors may not get back the amount originally invested. And now, onto the video. Good morning, everyone, or good afternoon, or good evening, depending upon when you're watching it. It's 8 o'clock here in the northeast of England, how do you start every single Friday? With your man in the north, Mr. Graham Nicholson of Cornhill International Payments. Graham, first one of the year, and this year has started with a bang. How are you doing, mate? What's been happening this week?
I'm all right. Listen, it's early. Happy New Year, everyone. We had a works party this morning. I brought my own Boris as it was all right. So anyway, I started the year very well. Thank you.
Very good. Very good indeed.
The only way I can start it is with live data this morning. UK retail sales, and unfortunately, everyone was stopping in with heat off. Whatever they were doing. Pretty poor numbers today. You're looking at year-on-year minus 0.9. It's supposed to be 3.4 plus, down minus 3.7. What's going to happen in January and February when they're not really going out months as well? And on top of 5.4 inflation, I'm not starting on a bad note. I'm just hitting you with the numbers.
Facts.
5.4 inflation, retail sales poor, and sterling's been hit on the foreign exchanges this morning. We're on weekly lows against the dollar, 135.64. It touched about a few minutes ago. Contrary to that, though, if I can give a bit of good news about sterling, this week we were over 120 against the euro.
Yes,
which is the highest since 2016.
Absolutely.
But people are saying, why the euro started really fragile this year. Credit Suisse put out against euro against the dollar. It's 113.30 at the minute. They're looking at below 110. It hasn't been there for a very long time. I said, why they're looking at that? The yield curve play for one. The market doesn't expect anything out of EU till end of 2023.
Yeah, and German bonds went positive for the first time in God knows how long this week. Everything's been about bonds. We've got a bit of a down day in European markets. It's literally just opened a couple of minutes ago, and the European markets are down. The US markets were selling off at the back end of yesterday. Yeah, it's all bonds. Bonds is telling the story, and everyone's playing to their drum at this moment in time. So we'll see how the year pans out in equity performance. It's going to be interesting.
I can understand why people are a bit fragile with the euro, just with the yield curve play, and also the Russian tensions on the border. We can't quite know, sitting on the European borders. It's the market's a little bit nervous about that. And you've got the in the market, it's nailed on for March. It's priced in for a hike in the US in March. But the FOMC next week, and there will be people will always speculate. Maybe it's a bit premature, but the market's priced in for that. Right, a little word on China. The market's been waiting for this, and this week they cut the short-term rates for liquidity, which is good. But more importantly, for the property sector, they've been waiting for this for a little while. The market. They eased the loan prime rates in 1 and 5 year, 3.7 and 4.6 respectively. Shares responded very well to that. So that was quite positively around the thing for on stocks. Just while I've got you, because you are the stocks man. A strong start for commodities. Oil. Quick word on Brent. It hit $88. It's about 88.50, 86.50 at the minute. It hit $88 this week. Last year it was trading at minus 20.
It was,
You had to
and
pay to give it away.
yeah, and there are a number of large investment bank predictions that's going to go over 100, 125,
Wow.
130, 140.
I'm bloody amazed.
Man, yeah, it's
I'm
listen,
amazed.
you, you
100 book turnaround.
yeah, absolutely. Inflation comes in. What you want to be buying? You want to be buying real assets,
That's
which
it.
includes stocks. Let's be perfectly
Yep.
honest. But yeah, the demand is there. People need to heat their homes in the northern hemisphere. People need to
There's a
put
massive
the power in the
demand.
car. Natural gas, obviously, we all know how that's been affecting everyone. Yeah, there needs to be some kind of plan. There needs to be some kind of plan put in place.
Another
What that
one
will
for
be,
you.
who knows?
Gold, 2 month high this week, $1845. And nickel hit $24,000.
Yeah.
So all about commodities, into stocks as well.
Hmm.
Um, this is where we are. Persistently high US Treasury yields keeping the
Yeah,
dollar bid, and the foreign
absolutely.
exchanges. The dollar is still near 96 on the index basket,
Hmm.
which is still high. It was below 90 last year. So this is how far the dollar's come
Yeah,
in yield curve
yeah.
terms and demand. Uh, and this heads into next week on the FOMC.
And
Um,
that's going to be key. That's going to be key. Since the last meeting in November, when the Federal Reserve Jerome Powell went hawkish, confirmed a hawkish position with regards to quantitative tightening, with regards to increasing interest rates. The inflation piece has become political. So you see, U.S. lawmakers are really screwing the Fed down to say, have you made an error? Don't let it go any further. And they have to react, which means increasing interest rates, which means increasing bond yields. It's, which will dictate your equity allocations. This is the biggest story. This is the biggest story of 2022. Bonds will dictate what will be successful in equities. That's it, full stop. And it's really interesting that the UK, of all developed markets, has started off with a flyer. But which part of the UK? Which part of the UK? That's the
well,
crucial part.
that UK 100 was up at 7,600. It's just
Absolutely,
swirling after swirling.
absolutely.
But my little note on the back of this was thought for the weekend, everyone.
Lovely.
Stellar returns in stocks, but which ones? Get yourself the best wealth manager, and I'm looking at one.
Oh dear me! I didn't pay him to say that, and I wouldn't pay him to say that.
I only tell
But
the truth. I never
no,
come in here and tell any
but
lies.
seriously, it's a different year. It's a different paradigm. There'll be people who
Years
argue
ago,
against
what were
that,
they in?
but
I
it's
think they're going to
like,
pick and choose
yeah,
because
absolutely. It's
that's
the successful areas, the successful investors are the ones who really look at their allocation this year. I can't express it enough. Really is interesting, but it's fascinating times as ever.
And on the foreign exchange, I can't really see anywhere past sort of FX is never a straight line. But just given where the yield curve stuff is, the dollar's going to be bid, sterling's going to be somewhere in between, and I think the EU and I think the Europeans are quite happy having a weak currency anyway. I
Yeah,
think it give their economy a better chance, longer chance to
yeah,
get out of things and stuff. And
absolutely.
I just think with their curve and how far the market thinks they're not going to touch anything in 2023, I think it could be dollar strong, sterling in the middle, and the euro lagging.
Yeah.
But we'll see.
We'll
We'll
see,
see
absolutely, absolutely. So this week, on Tuesday,
what's happening.
I've got a video with David Ridland of Castle Bay, the last fund manager in Glasgow, and it's about
Wow.
UK equities again. It does look, December was a very, very strong month for UK equities. January, on relative terms, has been strong for UK equities. Will it continue? Why will it continue? How do you need to be positioned? What is David's and Castle Bay's view? That's good. That's coming out on Tuesday. And then next week, mate, next Friday, we'll tune back in to see how everything's going. It's a fascinating week. And then the following week, just a heads up, we've got our first investment webinar of the year with regards to our thoughts. There's some bits on tax year planning. There'll be a link somewhere on the website if someone wants to go onto the website 3havencounties.co.uk to register. But that should be good. That should be grand. It's already hotting up. There's a lot of people signed up for that already, which would be good. And again, it's the beginning of the year. It's a fantastic time to readdress everything, how you're investing, because we are seeing monumental changes. Monumental changes. How long it'll last, who knows? But it's changing anyway. So that's it, mate. Great to see you. Great
Great start of
start.
the new year. I'm off to finish the works party, everyone, so I'll
Right,
love you and
okay.
leave you.
Well, I hope you've got some cheese there because
Yeah?
you can't have wine without cheese. You stay safe, mate. I will
Lovely.
catch up with you next Friday, and let's see how the markets have gone that next week. See you later, mate.
All the best, everyone.